Hey everyone, and welcome back to your Money Your Way YouTube channel. Today, we're diving deep into one of the most talked about names in the electric vehicle space, NIO Incorporated. Is this innovative Chinese EV maker poised for a massive comeback? Or are the challenges ahead too steep to overcome? NIO has shown incredible growth and technological prowess, but it's also facing intense competition, significant financial hurdles, and the complexities of global expansion. It's a classic high-risk, high-reward story. So, should you consider investing? We've analyzed their current standing, future outlook, recent news, and the key factors you need to know. Let's break it down. Please note that the content presented in this video is for informational purposes only and does not constitute investment advice. We strongly recommend that you seek proper guidance from a qualified financial advisor before making any investment decisions. First, who is NIO? Founded in 2014 with the mission Blue Sky Coming, NIO isn't just selling cars. They aim to be a user enterprise, building a community around smart, premium electric vehicles. They design, develop, manufacture, and sell EVs, focusing heavily on next-gen tech like autonomous driving and connectivity. Crucially, NIO is tackling the hyper-competitive Chinese market with a multi-brand strategy. NIO, their original premium brand, known for models like the ES8 SUV and ET7 sedan, holding a strong position in China's high-end EV market. They even started delivering their flagship ET9 executive sedan in March 2025. Onvo, Leidao launched to capture the mainstream family market. The L60 SUV started deliveries in late 2024, targeting the Tesla Model Y, and the larger L90 SUV is set for Q3 2025. An L80 is expected later this year too. Firefly, targeting the small, high-end city car niche, competing with Mini or Smart. Its first model launched and began deliveries in late April 2025. Beyond the cars, NIO pushes technological boundaries with things like their proprietary Shenji autonomous driving chip and, of course, their unique battery swapping system, which we'll discuss more later. Now, let's talk numbers. NIO's financials are a mixed bag. Looking at their full year 2024 results, revenue grew a solid 18.2% year-over-year to about $9 billion, 65.7 billion renminbi. Gross profit more than doubled, and the overall gross margin improved significantly to 9.9% from 5.5% the year before. Vehicle margin also climbed to 12.3%. Sounds good, right? But here's the catch. Despite improvements, NIO is still losing a lot of money. The net loss for 2024 widened by 8.1% to over $3 billion, 22.4 billion renminbi. That's a loss per share of about $1.51 for the year. Q4 2024 showed similar trends. Revenue up 15.2% year-over-year. Improved margins, 11.7% gross, 13.1% vehicle, but the net loss increased by over 32% compared to Q4 2023, hitting nearly $1 billion, 7.1 billion renminbi for the quarter. So, what's the problem? Margins, while improving, vehicle margins around 12 to 13% are likely still below what's needed for profitability, especially with intense price wars in China. High costs ran deep for new models across 3 brands, building out the sales network like NIO houses, expanding the battery swap infrastructure, and international efforts all cost a ton of money. These costs are outpacing the margin gains. Cash burn and dilution. NIO ended 2024 with a decent cash cushion, around $5.7 billion USD, but ongoing losses mean they need more funding. They recently raised over $500 million via a share offering in Hong Kong. This reliance on external cash raises the risk of diluting existing shareholders. Management aims for break-even by 2026, likely banking on doubling deliveries in 2025 to around 440,000 units, driven by Onvo and Firefly. However, analysts are skeptical, forecasting continued losses per share into 2026. Achieving profitability remains NIO's biggest hurdle. Operationally, NIO has shown strong momentum recently. Deliveries, April 2025 was a standout month, with nearly 24,000 vehicles delivered, a 53% jump year-over-year and their second-best month ever. This included strong performance from the NIO brand, steady contribution from Onvo, and the first Firefly deliveries. Year-to-date, through April, deliveries are up 44.5%. Q1 deliveries also met guidance. Product pipeline. Besides the new brand launches, Onvo L90 L80, Firefly, NIO is refreshing key models like the ET5 and ES6 with new tech in 2025. Partnerships. A major recent development is the strategic partnership with battery giant CATL. They'll collaborate on battery swapping networks, standards, and CATL plans a significant investment in NIO Power. This follows similar agreements with GSE Group and others, crucial for scaling the swap network. NIO operates in the fiercely competitive Chinese EV market, the world's largest. Market dynamics. New energy vehicles, NEVs, make up roughly half of all car sales in China. The market is dominated by domestic giants like BYD and Geely, with strong players like Li Auto, XPeng, and even newcomer Xiaomi making waves. Tesla is still a major player but facing increasing pressure. Price war. A brutal price war is ongoing, squeezing margins for everyone. NIO's position. NIO leads the premium RMB 300K BEV segment in China, but faces giants like BYD and Tesla in the mass market with Onvo, and tough competition in the small car segment with Firefly. Policy and geopolitics. Government policies are shifting from direct purchase subsidies towards supporting infrastructure like swapping stations, benefiting NIO, and trade-in programs. However, geopolitical tensions are a major risk. Tariffs from the US and EU make international expansion much harder and more expensive. Let's look closer at NIO's key strategies. Battery swapping. This is NIO's signature tech. Automated stations swap a depleted battery for a full one in minutes. The Battery Assay Service (BAS) model lowers the upfront car cost and offers potential recurring revenue. NIO has thousands of stations, mainly in China. Challenge. It's expensive to build and run, and station utilization needs to increase significantly, around 60 to 70 swaps day, to reach profitability, potentially by 2026 according to some analysts. Standardization and partnerships, like with CATL and GSE, are vital for success. Multi-brand strategy. Expanding to Onvo and Firefly aims to drive volume by accessing mass market and smaller segments. Challenge. This massively increases complexity, R&D, manufacturing, marketing, and execution risk. It could also pressure overall margins and potentially dilute the premium NIO brand. International expansion. NIO is in several European countries and aims for 25 markets globally. Firefly is key to this, targeting 16 overseas markets in 2025, with right-hand drive versions coming. Challenge. Expansion in Europe has been tougher and costlier than expected. Building sales networks and swap stations is slow, and EU tariffs add significant hurdles. NIO is now focusing more on local partnerships. What does Wall Street think? Sentiment is decidedly mixed. Analyst ratings. You'll find buy, hold, and sell ratings. Recent months saw downgrades from banks like JP Morgan and Goldman Sachs, though Citigroup maintained a buy. The average price target suggests potential upside, but also significant risk. Forecasts. Analysts expect strong revenue growth, around 38% in 2025, 32% in 2026. But, as mentioned, they predict continued losses per share through 2026, contradicting NIO's break-even goal. Stock performance. NIO stock has been incredibly volatile. It's down dramatically from its 2021 peak, over $62, and currently trades in the low single digits. Performance is swayed by delivery numbers, earnings, competition, policy changes, and geopolitics. Retail buzz. NIO is popular with retail investors, often discussed on platforms like Reddit. This can add to volatility through hype cycles and sentiment shifts. So, let's summarize the investment case. Potential upsides. Pros: strong growth, proven ability to rapidly increase deliveries. Premium position: leadership in China's high-margin premium EV segment. Technology: unique battery swapping tech and other innovations are key differentiators. Market expansion: multi-brand strategy opens up huge volume potential. Swap ecosystem: if scaled via partnerships, CATL, GSE, the swap network could be a major competitive advantage and revenue source. Large market: operating in the massive and growing global EV market, especially China. Key risks, cons: profitability. Persistent large losses and cash burn are major concerns. Dilution: need for funding increases the risk of diluting shareholders. Competition: intense rivalry and price wars in China threaten market share and margins. Execution risk: managing 3 brands, multiple launches, swap network expansion, and international growth simultaneously is incredibly complex. Swap hurdles: high costs, standardization issues, and achieving profitable utilization rates for the swap network remain challenges. Geopolitics: trade tensions and tariffs pose significant threats to international plans. Volatility: the stock price is highly volatile and sensitive to news flow. In conclusion, NIO is a fascinating but complex story. They have the innovation, the growth, and the ambition. The potential is undeniable, especially with their unique battery swap tech and multi-brand approach aimed at capturing a huge market. However, the path forward is fraught with peril. Achieving profitability is the elephant in the room, demanding flawless execution of a very complex strategy amidst fierce competition and significant financial pressure. Geopolitical headwinds add another layer of uncertainty. Investing in NIO today is highly speculative. It's a bet on management's ability to navigate these substantial challenges and turn operational growth into sustainable financial success. If they pull it off, the rewards could be significant. If they stumble, the downside is equally real. This is definitely not a stock for the faint of heart. It's suitable only for investors with a high tolerance for risk, a long-term view, and strong conviction in NIO's potential to overcome the odds. What do you think about NIO? Is it a buy, sell, or hold? Let me know your thoughts in the comments below. If you found this analysis helpful, please give the video a thumbs up and subscribe for more deep dives into the companies shaping our future. Thanks for watching, and I'll see you in the next one.